All right, here we are. We've got the market update for you for Wednesday, October the 28th, 2020. It's been a while since we've done one of these for you. We are now in our third day of a big market sell-off across the globe. We're seeing losses from names like Alphabet, of course, the parent of Google, down 5%, Facebook down 5%, Visa down 5%, and MasterCard down 7%. In the middle of the session today, Dow Jones is currently down 800 points, or around 3%. S&P 500 is also down about 3%. NASDAQ down a little bit more at 3.4%. The TSX index is down 2.3%. Now, we're less than a week away from the US presidential election, and even though cold and flu season has barely started here in the Northern Hemisphere, COVID-19 is starting to surge in many parts of the world. We're seeing major shutdowns happening across Europe. And we're just 2 months left for the rest of the year 2020. It's a crazy year it's been. So let's take a moment to recap what's happened in the market. I'm going to reference mostly the Dow Jones Industrial Average. The Dow Jones Industrial Average hit a high on February 13th of this year at 29,423 points, then dropped to March 23rd at 18,590 points. This is a 37% decline from peak to bottom. Recently, it recovered to 28,800 on October 12th and was just 2% away from the peak. And now here we are back at a session low of 26,600. Okay, so let's put this in perspective. 2 years ago, at the end of October 2018, the Dow Jones Industrial Average was at 25,300 points. A year later, it was just over 27,000 points. So that's up 7%. But 3 months later after that, it peaked at 8%. So basically, it took 12 months to gain 7%, and then 3 months for the index to gain an additional 8%. This data supports the Warren Buffett philosophy that successful investing is all about time in the market and not timing of the market. But wait, now in 3 days, the Dow Jones is down 6%. So what about the Peter Lynch investing in what you know model? It's a quick history lesson for you. Peter Lynch ran the Magellan Fund at Fidelity Investments. Starting at the age of only 33 years old, Mr. Lynch averaged a 29% annual rate of return on his fund from 1977 to 1990, more than doubling the performance of the S&P 500 stock market index. Keep in mind, during this period, the stock market was relatively flat for the first half of the period and also saw the massive crash of October 1987. Now look, Warren Buffett is the Oracle of Omaha and Peter Lynch is an absolute legend. They both have a solid track record of how to make money in the stock market. So what method is better? The Warren Buffett buy and hold philosophy or the Peter Lynch buy low, sell high active trading strategy? For myself and our clients, the answer is both. Here's our approach. In our clients' equity portfolios, we split their equities into two categories: perpetual holds and short-term trades. Now, perpetual holds, by our definition, are positions that you plan to keep for decades. These can be even further split into broad market ETFs and individual companies. These are positions that tend to be in large Canadian and US blue chip stocks. Companies with strong balance sheets, many years of positive earnings, and of course, consistently rising dividends. By contrast, short-term trades are generally with the growth stocks that don't pay dividends. These are investments that can be considered through a big market drop like we're seeing right now, as well as taking advantage of new issues and IPOs. So look, at the end of the day, there are two great ways to make money. We embrace both of them. There's a good idea to have some of your money invested in perpetual holds for the long term so you don't miss out on those big runs in the market that you might not time successfully. But there's also times like right now where an active trading strategy will really pay off. Are we investing in the market today? Not yet. I think a few more bad days are ahead of us, but we're getting ready to pull the trigger. If you'd like to talk about your investment portfolio and talk to one of myself or our team, Stefan and James or Alex, give us a ring. We'd be happy to chat. We'll check in with you soon.